Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 2nd day of March 2020, and this is the Daily Report for Gold and Silver. We have had some wild swings in the precious metals markets. Gold specifically, we'll cover that in a second, and a 1,200 plus point rise in the Dow. Last night in overseas trading, it was up about $44. It was up for some very rational reasons, and those reasons were central bank intervention and easing almost across the board globally, and talks about the Federal Reserve cutting rates 3 times. It is for that reason that we did put on a trade last night. We'll talk about the results. We did get stopped out when we pull up our technical studies, but gold is still, I believe, in position to move higher. The timing was just not right. First, let's take a look at our price board. Traders, an incredibly large move in the Dow, up 1,300 points. We're looking at current gold pricing at $1593.20. It shows a net change of down $1.80, but it is the morning in Australia and they're trading there. So all of these prices reflect the changes in Australia. Platinum, that also is up $9.80 at $869.20. Palladium is at $24.49.60, and lastly, silver is at $16.28. Let's take a look at our charts. Traders, we did send out a trade alert, and when we did that, the market was trading roughly at 16.10. In fact, I believe this is the chart that I sent out to you. There were multiple reasons why I felt that it was appropriate, and I'll talk to you about that on a real chart. But what we are looking at is as follows. Friday's close had shown definitive support at the 50-day moving average. When we were looking at the market last night, it was up about $40 to $45. In other words, rather than this being a small doji here, it was at the top of the market, and it had broken through a trend line that we had been following, and that was the third reason. However, I needed to keep our risk parameters small, which is why we placed our stop where we did, so we would limit any kind of damage. Also, my hope is that by sending it out very late at night here, that many of us in the mainland would have received this on the open, and then they would have entered this at 1586, and the stop would be much less cumbersome, so to speak. It would be a very small drawdown. Nonetheless, we did take and sustain a loss, but I am still bullish on this market, and I'm bullish for multiple reasons. One of them is what all of the central banks are doing. They're all easing. They're all expecting the current crisis with the coronavirus to grow. Now, the stock market's disregarding that, but when there's talk about 3 rate cuts by the Feds, the Bank of Japan came out and said they would do whatever they needed to stave off any economic damage, and we have concrete data that globally the economies are slowing down. That tells me that long-term there is a very solid reason to see gold go into rally mode. Traders, we realize that profitable trading is done by having more winners than losers, and there's no such thing as someone that trades 100% all of the time. This was obviously a loss, but I firmly believe that when this market rallies, we will more than compensate for it, and I am still targeting 1700. It's just going to be a matter of positioning ourselves properly on the next trade. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.